Creating a trading plan is the most tedious thing you could ever do, and yet is the single most determinant factor in your way to becoming a profitable trader. The internet is filled with videos telling you how important it is to have a trading plan, yet nobody shares how to create one. In this video, I'm going to share a 5 simple step process which you can use to create a trading plan from complete scratch and ultimately join the top 5% of consistently profitable traders and make more money. I came across these after years of trial and error and watching every possible video on YouTube to compile them into a 5 simple step process which can be used by anyone. Even if you are a complete beginner, then by the end of this video you will have all the necessary tools required to create a trading plan. In fact, I myself have used this same approach to go from a consistent losing trader to 100k funded in just a few months. So without wasting any time, let's get right into it. The first and foremost thing you need to add in any trading plan is the criteria you're looking for. By criteria, I do not mean an entry pattern. Instead, what is it that makes a trade valid for you? What is it that you even look for before entering a trade? Remember, criteria comes first and the entries later. The specific criteria I use is number 1, the markets must be trending in a clear direction in the 4-hourly or daily for me to even consider trading that pair. To make it even more mechanical, you can probably use something like 50 EMA and say that every time price is above this 50 EMA, price is in an uptrend and I'm only looking for long trades. Now that my first criteria is met, I move on to my second criteria, which is the markets must reject from an area of interest in the 4-hourly. You see, what I'm doing over there is to create specific criteria to validate a trade. The more specific it is, the better. There's a reason why I'm adding specific time frames, as it minimizes any room for error. You can have different criteria based on your own strategy. This is just an example of what you need to include in your criteria section. For some SMC traders, a criteria might be to look for a sweep of liquidity before looking for any trade, or whatever it is for you, it depends on your strategy. I'm not here to teach you a strategy, but to teach you how to convert that strategy into a profitable trading plan. In this section, you simply need to add all the entry patterns you look for to enter a trade. The specific entry patterns I look for is consolidation breakouts in the 1-hourly. So as soon as price breaks out of a consolidation, I enter the trade. For some of you, it might be using imbalances to enter the trade. Whatever it is for you, I want you to write it down clearly in your trading plan. A bonus tip that I would like to share with you is to print out a few of your trades and stick them in your trading plan if you're using a physical one, or add the screenshots of it if you're using Notion or some other software. The idea is that every time we come to our trading plan, we should be reminded what is it that we are exactly looking for to enter a trade. We as humans learn visually faster than any other form. Now that all of your entries are sorted out, you might feel that half of your work is done. But this is where the real work begins. The next 3 steps can make or break your trading career. So I want you to pay close attention. The next step in our 5-step process is stop placement. A stop loss is simply a level where a trade of yours becomes invalid. You must decide your stop loss in advance, as that is what determines your lot sizes or the contracts you trade. The biggest mistake traders make is to enter random lot sizes having a mental stop loss. A mental stop loss might work for a hardcore scalper who gets in and out of the markets in just a few minutes. But apart from that, you must have a dedicated section in your trading plan. Your plan should clearly define when is it that a trade becomes invalid for you. Again, there are 2 ways to approach this. Number 1 is that you might have a fixed stop loss where every trade you enter, regardless of the setup, has the same stop loss. The second type is a variable stop loss where your stop loss varies from one setup to another. So I want you to sit down and be as specific as possible with your stop loss placement. Instead of saying that I will put my stop loss below the wick, you can take it a step further and tell that I'll put my stop loss below the wick that did the breakout. So remember, specificity is the key while creating our trading plan. Now that you've entered the trade with a stop loss in place, we move on to step number 4 in our 5-step process, which is take profits. As the name suggests, it is simply a level where you secure your profits. Now I won't waste much of your time by elaborating on take profits, but what I will say is that your take profit levels are equally, if not more important than your stop loss placement. What's the point of putting so much effort into a trade if you don't have a proper system to capitalize on those gains when the market does moves in your favor? So I want you to really think about it and have take profit levels as an important part of your trading plan. Till now, you're done with 70% of the work. The rest 30%, which is also the last step of our 5-step process, boils down to a risk management so strong that makes it impossible for you to lose in the long run. This part of your trading plan is the most important of all. Without a solid risk management, no strategy can make money for you. You can't increase or decrease your risk based on how you feel, as it is a recipe for disaster. So you must have proper systems and processes in place to manage your risk effectively. The specific questions I want you to ask yourself is: number 1, how much am I gonna risk per trade? Number 2, what am I gonna do during drawdown periods? The last question is very important and is often overlooked by a lot of beginner traders. Losing is an inevitable part of trading, and you will have losing streaks when you enter this career. What will you do when faced with 4 or 5 losing trades in a row? Will you decrease your risk or stick to the same risk? I want you to write it down clearly in your trading plan. But you know what? Just because you have a profitable trading plan does not mean you become a profitable trader. You will still make certain mistakes and learn from them. I myself did, and it took me years to realize what it actually takes to become a profitable trader. I've outlined the top 3 lessons I've learned after blowing 20 plus accounts in this video. I'll catch you guys in that video. Till then, take care. Bye bye.